rich and famous. Hey. On YouTube.
I put Vince Lombardi in the thumbnail because Vince Lombardi famously once said, "Sundays are for God and football." Of course, there's a third alternative if you are a trader, which is Sundays are for watching the futures reopen. And we're about 5 minutes away from the futures reopening right now. As we head into the week, we are kind of in the middle of earnings seasons right now, and but there are major binary events coming up to influence the market, and one of the big ones is, of course, this stimulus package, which is being debated and should be passed soon, maybe this week. There is this thing that people have been talking a lot about, this sort of fiscal cliff, they call it, where the extra enhanced employment benefits, which, if you follow this show, we've been following for some time now, are set to expire. In fact, in some states, they already did expire. I believe Texas last week was the last week to get that additional $600, whereas other states, most other states, it would be this week, July 31st officially. So, for example, in Massachusetts, where unemployment goes from Saturday to Saturday, I think it goes from Sunday to Saturday, the last chance to get that $600 would be for people that certify starting today for the last week ending July 25th. So what does this mean for the markets? Well, I think that we could probably expect not to have a huge move one direction or the other until after the news comes out about this whole stimulus thing. Now, it doesn't seem like this is too much of a binary event in reality, because we pretty much know what the result is going to be. It's just kind of a little bit of horse trading still going on, but we generally believe that they are going to still have a certain additional amount. Well, first of all, that they're going to have another one-time check. Remember last time when the stimulus package came out, we had a one-time check for $1,250. It was for everybody that makes less than $75,000 a year, and it fades out after that amount. This time around, it might be a lower threshold, like maybe like $40,000 a year. And there's pretty much been signaling on one side. We've got people saying, we've got the Republican Party, which is, saying, well, let's give $100 or $200 additionally a week as opposed to the $600 we had. And you've got the Democrats saying, let's give the full $600. So they're going to probably meet in the middle somewhere, right? So $300 maybe a week, something like that. So it's not that big of a surprise. However, the markets have been acting pretty strange lately. We've made a lot about the fact that the markets have rallied kind of more than the economy actually has recovered. I think that's kind of a safe way of putting it. And there are different voices out there. If you go on Twitter, there's some people saying, well, it's obvious that the markets are going to rally now, and there's other people saying no. So as usual, there are different opinions on what's going on in the markets. Okay, so we've got about 2 minutes till we open here. Let's take a quick look at the VIX term structure. Now, the VIX term structure, we like to say, is not predictive of what's going to happen in the future. However, at this particular moment, it seems like it possibly may be sort of predictive in that, and I'm going to flip this over really quickly. I'm going to flip it back after 1 minute because I want to have the screen up when we open. But just really quickly, you can see right now the spot VIX price is way lower than the futures. It's $2.80 right here. Obviously, the VIX is closed right now, and the futures are not, so it's not totally accurate, but we see this huge, we see the OCC future so much higher than the other futures. This talking to the election and some potential volatility between now and then. So at some point, this is going to collapse. We just don't know exactly when. But I would not be on the long side of things, and I would be strategic on the short side of things. Let me bring this screen back down again so that we can watch the open of the futures here together as we're about 1 minute from the open. What's going on, Spencer? So pull back your chair, and let's watch this together as we see the open coming up right now. And not a whole lot expected. What if I look at weekend? Let's take a look at weekend Wall Street really quick. Weekend Wall Street. Yeah, it really was a bummer for me. I did really well on Thursday, and Friday I gave a lot of it back, which was very frustrating. So weekend Wall Street has us up 50 points, so positive 50 points. We will see what happens on the open here as we're about 20 seconds away from the open. I have the E-minis up. We can switch to the NASDAQ pretty much right after that if you want to. Microsoft and Apple looking kind of weak Friday, right? Apple was... let's see. Oops, sorry, I didn't mean to switch that over. Let me switch this back. Okay, so we are just opening, and it looks like we're up slightly. We've got E-minis up 650, NASDAQ up 20, so pretty much of a non-event here. It is very likely that we will rally at least right when it's announced that the stimulus package goes through. I think that is likely. I also think that this has been a market of rotation. Much has been made about that, at least in the financial media that I study, about how people are trying to be strategic in which stocks they purchase. And so companies like Lululemon, which I've been focused on now, or like Wayfair W, so we've opened up 7 on the E-minis, 36 on the NASDAQ. Right now we're kind of hanging up just slightly in both of these. I would consider up 30 points or 40 points in the NASDAQ, just up slightly. Companies like Lululemon or Wayfair, which have been kind of rebranded now as companies that benefit when we are like at the most lockdown stage, because it appears people sit at home and they buy stuff online and such, and thus Wayfair and Lululemon have been benefactors of that. And indeed, Friday Lululemon was very strong. With the market down, Lululemon was up. So if we take a look at Lulu here for Friday, as we continue to sort of rally off of this open here, currently E-minis up 7, NASDAQ up 49. As we continue to rally here, let's take a look at Lululemon on Friday, and just a real position of strength Friday compared with the rest of the market. If we take this and we put a chart of the NASDAQ next to it over the course of the trading session Friday, you can see NASDAQ was down significantly with Lululemon up on the day. So this has been showing real strength in the face of a sell-off here. And I really believe that just speaks to the fact that this is seen as a winner of increased COVID infections, this sort of thing. Lulu is seen as a stock that sort of benefits from that whole scenario. And you can see, I don't know how clear, well, let me back this up a little bit, but this is the purple would be the NASDAQ. And you can see here Friday, NASDAQ down, Lululemon up, and continues to stay solid. You can see it certainly, on Thursday, when you've got the NASDAQ way down, all of these stocks just follow the NASDAQ down. And in general, a lot of stocks have been acting in concert with the major indices. Everything gets pulled down if you've got a bid, or I'm sorry, if you have an offer in the monsters of tech, your Apple, Netflix, Google, Amazon, etc. If those are going down, then the rest of the market gets pulled down regardless. But when stuff is kind of calm for a second, or a rotation is going on, we see certain stocks benefit and others don't. And Lululemon has certainly been a benefactor here. If we just go back to like a 180-day view of Lululemon, you can see just the rally in the stock has been pretty tremendous over that time period as we look at it there. Okay, so back to the VIX term structure. It is pretty extreme right now. The amount of contango, now the amount of contango isn't extreme like long term, but it's extreme for this year where we haven't seen much contango, and the distance between spot and the futures is pretty extreme. Now this is going to come to roost at some point. That meaning we are going to see significant decay in these products, one, and we're going to see move to the downside, and the VIX continue here. We were talking earlier this week about the fact that the average VIX is like 20. One study had it 17, so you could use 17, use 20. It just kind of just depends on which set of data you have, but either one of those numbers is lower than where we are now. And if the average is 17 or 20, that means that half the time we're below that average. And so we have stayed significantly above the average in the VIX for like 6 months now. And, that can't go on forever, but for me, it makes sense that we're above that average due to the fact that, once again, the market has had this huge rally in the face of bad economic news for the economy. And, I know there's people out there that will say, well, the COVID is fake and it's just going to disappear as soon as the election comes, and all this other conspiracy theory about that stuff. But I reject that. And I can see with my own eyes that these businesses are closed and unable to produce goods and services, and people are out of work. There's huge unemployment right now in this country, and that has to have an effect on the economy and the markets eventually, one way or another. And I can't get off of that, and that is kind of why I have been bearish lately. And I see people in the comments saying, why do you hate the president? And this is those two things are not related. First of all, I don't hate the president, and second of all, which political party you have does not determine your view of the stock market, or at least it very much shouldn't. If it does, you're going to end up not being a successful trader. Let's put it that way. I reject people who are telling me, "Oh, you're bearish because you're a Democrat and you don't want the U.S. to do well," or I don't know, something like that. But there are people out there that feel these strange feelings. So just to kind of sum things up, we are up now, but not as much as we were. Now E-mini is currently up 2, and I would just pretty much consider this whole thing a non-event as far as the open today in the futures. We are not up as much as we were, and stuff was pretty much unchanged to begin with. Let me erase these studies here, and we'll go back to a look at the minute chart on these products. And we see we've just kind of given back just a little up move we had. And I would suspect we don't get, let me get out of the way here. I would suspect we don't get a big one-way move one way or the other until the terms of the stimulus thing come out. We know that this dominated the all those Sunday political TV shows. But as I said before, the two sides are not too far away on all of these issues, and so I think it will come together. There's been much talk about how, like, we have to get this done before X date because people are going to lose, they're going to go off a cliff. But, as far as I see it, as long as a deal is being made, if people miss a week or something, that's not a huge deal as much as just some sort of deal being struck for continued unemployment. I think that this is important. Just full disclosure, I am personally affected by this stuff. My job besides YouTube and all that, I do work at a resort doing weddings, and so I could be seen as being in one of the bigger categories of being affected by this stuff, my trading life notwithstanding, and so it affects me in a real way, some of this stuff. Anyway, But like I said, I believe the stimulus stuff will go through this week, and they are pretty close to a deal. So, but look for volatility to come in just on the deal being completed. Now, I don't believe that the whole term structure is going to collapse and vol is going to come crashing in just because they get a stimulus package through, because we still have a lot of questions up in the air. I think we need to see, again, the COVID thing is becoming more and more in play as far as the markets are concerned, and we need to see the height of infections. We've seen it like 60,000 a day, 65,000 a day, 70,000 a day. We've seen deaths go past 1,000 a day. We need to see that peak and turn in the other direction. For the longer period that does not peak and turn in the other direction, we are getting closer to the fall with, the flu and these other things causing more problems for the medical community, and this continues to become an issue, I believe, of downside pressure on the market. Nobody knows what's going to happen to the market from one day to the other. People who tell you they do know what's going to happen, I would not listen to. It is a mystery what happens to the market day to day. Now, over the longer term, historically, obviously, the markets have rallied, and that appears like it will continue. Reasons for this are there's more and more money being created in the world, and there's only so many places it can be put. There's more and more people in the world out there to invest every day, et cetera, et cetera. There's the U.S. Is still one of the best places in the world to put your money compared with other parts of the world. And these and other factors lead one to believe that the market will continue to go up over time. So, when I talk about being bearish on the market, that's a short-term thing. It would be silly to think that the market was just going to keep going down for any period of time, because that would just go against a lot of factors that are in play. For one thing, think about it. Every week, everybody who's working now, there's some people unemployed, right? But everybody who's working who has a 401k automatically is putting money into the market. So to have the market go down, you have to first overcome that constant flow of money into the market. And that is not, you could do that for a little while, but you can't do that for long periods of time, because that's a constant stream of money entering the financial markets, and fighting back that is like fighting the tides. All right, so I'm going to let you go now. It's been kind of a non-event. Stretchy pants, not a cure for COVID. Well, apparently, Oliver, stretchy pants may be a cure for COVID. And unfortunately, I had some great, a nice trade in Lulu on Thursday, but I did give about 2/3 of it back on Friday, which was incredibly upsetting to me. We've seen some weakness in, your Teslas, your Apples, and your Microsofts. Pay attention to that stuff, folks, because those companies have the huge market capitalizations, and they dominate the major indices, and where they go, ultimately the indices go. Same thing with Tesla. Guess what? Tesla's now back to 1,400. Watch this. I watch Tesla during the day. As Tesla breaks to the downside, it can be harder for other stocks to rally. Now, certainly, someone like me watching out of the corner of my eye, you have to think professional traders have Tesla on their screen and are watching it. If Tesla breaks to the downside down 100, it makes them less willing to press the buy button on other things. Here's the screen for Tesla for the last couple weeks, and it certainly could consolidate here and rip back to the upside. But these are huge numbers here. Look at this, 900 down here. That's a doubling. It's a doubling that's happened in a month, right? So this is volatile here. And the NASDAQ range on Friday, huge range, right? I mean, look at this stuff. It was bouncing all over the place. In fact, last week, let's just go to a 5-day here in the NASDAQ. I mean, it's ripping all over the place. So here was Friday, right? So 10,375 gets all the way up to, it got all the way down to 10,300, and then it gets up, it rallies almost 225 points in like a half an hour, right? And then it goes back down, another 125 points I mean, this thing is volatile during the day. It's ripping all over the place. And I watch this very carefully during the day because, as I said, if this starts ripping in one direction really hard, it's very hard for other stocks to avoid starting to head in that same direction, right? Because this represents those big ones, your Apples and your Microsofts and whatnot. And so I would start watching the NASDAQ on your screen if you're trading during the day. And if you've got a hedge to put on or whatnot, I would take into account what's going on with this. And it's been moving around like crazy, folks. All right, so there you have a little information. I am not an advocate of betting on the VIX one way or the other right now. I think it has the potential to move very big to the downside. It has a little less potential to move to the upside, but it certainly could if the NASDAQ starts to break downwards. But exciting times. This is a trader's atmosphere here. This is what traders live for. We have huge moves in many stocks day to day and also during the day. So there are opportunities to make and lose money during the day. So also, please check out this excellent video by TheoTrade. I know some people have kind of tuned out of TheoTrade because they see Don Kaufman as a perma bear, but there is an excellent piece. There's also, I think, in the Wall Street Journal this weekend, it appears that retail trading has just exploded during this crisis. And the evidence that TheoTrade presents is that over half the derivatives trade even is retail traders. And this has exploded in size over the last couple months. And, you know, your big names, you know them, IB, TD Ameritrade, E-Trade, Tastyworks, not as much of the huge ones, but these companies have a lot of their trade is retail. It's the smaller guys. It's the guys that are watching the show. It's normal Americans trading has become huge, and it has been exploding recently. Now, what does this all mean? Well, you know, if you talk to professionals, they'll say, oh, well, retail traders don't know what they're doing, and this means that, like, if we start to move down, it's going to just accelerate the volatility and whatnot. But don't count out retail traders that quickly. People are becoming more and more educated through programs like this one, or Greg's program, or, your program, Mr. Oliver, and so retail is becoming more and more sophisticated, and it's helpful to the market that we have all these retail traders in there. It provides liquidity. It provides stuff. It provides a bid and an offer. It provides tighter markets. It's better for all of us, the more people that are trading, and we've seen an explosion in people trading. Please check out that TheoTrade video from Friday where he talks and gives this statistical information about how many retail traders are out there. So there you go. Now E-minis, it looks like about to go negative, but not really much happening. I believe the markets are going to wait to find out what the stimulus package is before they make a huge move, either up or down this week. However, once that stimulus package comes out and once we're through the bulk of these earnings here, beware. I think we're going to stay volatile, especially moving up toward the elections here. The race there's been a lot said about, Biden taking a lead in this race, but don't count the president out yet. This is going to be a fight for the election here coming up, and it will be reflected in more volatility in the markets, I believe. I would be hesitant before I laid into a volatility short. We could get a spike here. We haven't had a big spike in the VIX in a decent amount of time here, and we certainly could get it. We're still coming off that big spike from March, but there are fireworks ahead for you there, folks. All right, so to sum it up, the opening of the futures, non-event, awaiting the stimulus package this week, and awaiting the rest of earnings as we move into the week. The monsters of tech have seen some weakness, and the NASDAQ is ripping all over the place. Thanks for watching. Stay tuned here for continuing coverage of the markets, and best of luck to you in the early part of the week. I hope to catch you soon in another program about the markets. Thanks for watching. See you soon. Bye.
You're watching Famous Dave.
Go out there and make some money, folks.
On YouTube.